A little bit concerned about what's going to happen with the higher interest rates.
The US Federal Reserve rate. The US Federal Reserve rate, the people have been asking me how it affects the Singapore rates. Historically, the rates in the past used to increase when the rates increase in the US. But that's not 100%. In fact, over time, it's delinked. The impact only affects us to a certain degree, not 100%. And one of the things we have to take note is that Singapore exchange rates are quite strong. So, that defends us against the transfer of interest rates over to us.
The bank loan I actually took up for a fixed loan. Luckily, at that point of time, the COVID period, I managed to get a 1.5% of the fixed lending rate for 5 years. So I'm actually quite lucky. After that, I think a few months later, it really increased for the rate.
So the current loan, I fixed it about 2 years ago, so it's nearly up for renewal. The rate was just above 1% fixed. So yeah, I'm a little bit concerned about what's going to happen with the higher interest rates.
Well, yeah, look, I think everybody's going to be affected. And I think people just don't realise that traditionally in my lifetime, mortgages were 4, 5, 6, 7%, going up to 14.5%. I believe in certainty because you have to budget. So whenever possible, I would always fix a rate for a period of time.
I understand, that this is something that central banks have to do to combat inflation. But of course, it does hurt people like who are leveraged, like myself.
On the overall, in terms of personal spending, I think you have to reduce their personal expenditure so that they can cover for the cost increase. If they can, try to source for different lenders and in terms of who offers the best interest rates so they enjoy more cost savings.
When we take loans on property, it is 25 to 30 years. Ups and downs is to be expected, and so when you plan for your purchase, make your loan longer. Now, you may be thinking, it's more expensive, right? The answer is yes, it's going to get more expensive, but what it does for you is that it lowers your monthly commitment.
I hope it goes down. I really do. It's been going up for a while, so it's about time it comes down. Even before all the increase in interest rates, I'm going to have to come out more on top of my CPF. So I think it's going to be worse.
Do I think they'll come down? I think marginally, but not until the end or back end of this calendar year. I think people, first of all, should be aware that they can refinance. And if they can get a better deal, then I think that's a good thing.
The interest rate is beyond your control because it actually depending on if you take up for a floating rate or fixed lending rate. So most importantly, is saving is important.
I think with interest rates rising, one of the important elements is actually looking at one's cash flow. The final approach that one can do is to look at repricing or refinancing one's loan. If your interest rates are lower for your new package, your installments will drop, and of course, your total loan interest will drop. So for refinancing, the best thing you can do is to start reading more, come to the PropertyGuru website and read the content that shows you what are the important things to consider. You may want to look at different banks, at what the interest rates are, or look at the PropertyGuru interest rate packages that we summarize for all of you. I think that makes it a lot easier for you as the consumer.